This company was worth billions. Then it faced a test. Tesla is worth hundreds of billions, more than many traditional car companies. But why? Tesla is not just a car company. It's a technology company. Innovation, electric vehicles, autonomous driving. But the valuation raises questions. Can Tesla justify its value? Competition is increasing, the market is evolving, and expectations are high. It was a technology titan, and it was a car company. Silicon Valley's audacious code and Detroit's industrial might. The world watched, captivated by a story both revolutionary and fragile. This was not just about building cars, rewriting the rules of transportation, rewriting the rules of energy, rewriting the idea of what a modern corporation could be. Electric vehicles moving silently through city streets, batteries storing the sun's power, a software brain called autopilot, hinting at a world without drivers. These weren't product features, they were declarations of intent. Old ways were obsolete. The internal combustion engine was a fossil. A new industrial age was dawning. This narrative was powerful. It was intoxicating. People wanted to believe in it, and they bought in with their hearts and wallets. Tesla sold an identity. Owning a Tesla was a statement. Forward-thinking, technologically savvy, conscious of the planet's future. Computers on wheels, constantly learning via over-the-air updates, a radical departure from the old model. Tesla made electric cars cool, from quirky niche to high-performance status symbols. The world noticed. Competitors scrambled, governments incentivized, the public lined up. Tesla didn't just enter the game, it changed the entire stadium. The growth was explosive, a hockey stick curve that defied gravity and conventional business wisdom. New factories, dubbed gigafactories, rose from the dust in Texas, in Berlin, in Shanghai, each a monument to relentless ambition. New models, mass market Model 3, the angular Cybertruck, unveiled to blockbuster fanfare. The company expanded its reach across continents, planting its flag in markets once dominated by legacy automakers. The stock price soared to stratospheric heights, creating a legion of Tesla millionaires overnight. A unique and powerful faith surrounded the company. For many, investing wasn't a calculation, it was belief, a ticket to a promised future. Investors weren't buying just a car company, they were buying a piece of a vision. Robotaxis, humanoid robots, a sustainable energy grid for all. Numbers often felt secondary to the narrative. This was a cult of the future. At the center, Elon Musk, more than a CEO, a showman, a headline-generating machine whose tweets could send the stock soaring or tumbling. Seemingly impossible timelines became official roadmaps. He embodied the brand's renegade spirit and belief in destiny. But stories built on towering expectations carry immense weight. Velocity creates heroes, and spectacular flameouts. Relentless growth can obscure weaknesses. Hype can deafen a company to quiet warnings. The higher Tesla climbed, the thinner the air, and the further it had to fall. Investor faith became both its asset and liability. A pressure cooker of expectations reaching a boil. The road ahead was not as smooth as it appeared. The numbers became staggering. At its peak, Tesla's market cap dwarfed Toyota, Volkswagen, Ford, General Motors combined. Think about that. A relative newcomer producing a fraction of vehicles valued above the established order. It felt like a glitch in the financial matrix. The market wasn't valuing Tesla as a car company, but as a technology, software, and energy company, a disruptive force across industries. Analysts projected not just millions, but tens of millions of cars. A vast network of autonomous Teslas, generating recurring revenue as a robo-taxi fleet, selling a future annuity stream of unimaginable scale. Musk's vision was gospel, and Wall Street sang in higher price targets. Expectations were celestial. Believers weathered delays, missed deadlines, even erratic behavior. Buying every dip. A feedback loop formed. Rising prices vindicated faith, fueling more buying. A reality distortion field warped traditional metrics, PE and margins dismissed as relics. Tesla was judged by vision, tech leadership, and audacity. But the higher it climbed, the more miraculous the future it had to deliver. Then, slowly, the road began to get rough. The narrative, once seamless, started to fray. Turning grand visions into reality is brutally difficult. Production proved a persistent bottleneck. Promised alien dreadnought factories, fully automated, hit snags. Delays tested patience. Quality issues tarnished a premium image. Panel gaps, paint defects, recurring fixes. Autopilot, hailed as the future, faced intense regulatory scrutiny and high-profile accidents. Headlines shifted, innovation to safety questions. Was full self-driving promise or exaggeration? Regulators were no longer just watching, they were investigating. Sleeping giants awoke. Ford Mustang Mach-E, an F-150 Lightning. Volkswagen poured tens of billions. Hyundai and Kia surged. The moat teemed with sharks. Competition was fierce. Tesla cut prices to defend share and shocked investors. Tech-like margins looked shaky. Maybe Tesla was more like a traditional car company than the market had priced. Doubts, once whispered, were now spoken aloud. So what went wrong? Not a single failure. A convergence of hard realities. Execution, technology, regulation, and the macro tide. Building thousands for early adopters is one thing. Millions consistently and profitably, another. Years later, full self-driving remained a beta requiring supervision. The credibility gap widened. With rising rates, investors paid less for far-off promises. Story gave way to hard results. Profit, free cash flow, realistic growth. The stock that felt one way to the moon became a volatile roller coaster. Tens of billions in value gained or lost in a single day. For those who bought near the peak, paper losses were staggering. The easy money was gone. Blind faith gave way to anxiety and debate. Every quarter, every delivery, every tweet, scrutinized with urgency and fear. Price cuts signaled the fight for every sale in a crowded market. Behind the scenes, layoffs, scaled-back expansion, a renewed focus on manufacturing efficiency. Swagger yielded to the math of margins and operating expenses. Forced maturity, quick and painful. Legacy automakers grew bolder, accelerated EV plans, and marketed head-to-head. Suppliers reassessed power balances. The ecosystem sought a new equilibrium. The tremors spread across the EV market. Startups with frothy valuations saw stock prices collapse. Easy capital dried up. Mergers, bankruptcies, a fight for survival. The new narrative, not chasing impossible valuations, but building sustainable, profitable EV businesses. Tesla's price cuts and squeezed margins underscored an old truth. Cars are hard, margins thin. For retail investors, the lesson was personal. Parabolic up can mean parabolic down. FSD's difficulties highlighted the gap between demos and safe, scalable reality. Move fast and break things met engineering, testing, validation, when lives are at stake. In the final analysis, Tesla is a tale of two truths. First, undeniable success. It made EVs desirable, forced a century-old pivot, accelerated adoption, innovated in batteries, software, and charging. It was a catalyst, a disruptor. It proved the impossible was possible. Second, price is not a reward for past wins. It is a bet on future profits. Price is cold, hard math. Cash flows, growth, risk. For years, Tesla was priced for perfection, to dominate autos, launch and scale new businesses, and sustain towering margins. When a stock assumes a flawless future, any encounter with reality feels like failure. Yet advantages endure. One of the world's strongest brands, default EV choice for many buyers, a formidable supercharger network, and a software lead in OTA updates. Challenges are real. Grow and keep profits amid credible competition. Solve mass manufacturing. Deliver quality at scale. Match promises to reality under intense scrutiny. Regulators, investors, and the public are watching. The pioneering phase is over. The trial of a mature global industrial giant has begun. The lesson is balance. Vision inspires and attracts capital. Execution builds, sells and services, or dreams shatter on reality. Is Tesla overvalued or simply ahead of its time? The answer depends on navigating the road ahead. If it innovates, controls costs, and maintains tech leadership, perhaps the valuation will be justified. If competitors close the gap, margins stay pressured, and future bets fail, price will align with modest reality. For investors, do not fall in love with a story. Look at the numbers. Scrutinize the balance sheet. Watch management under pressure. Trust, but verify. Tesla forged a new path and walks a tightrope of expectations. We watch. We wait. We check the numbers. Time will answer. And the world is watching.